we analyze. So I called this trade I think 3 days ago on Solana USD, and we are getting the final TP hit. Wow. Okay. Um, let's see what US 30 will do. So this is the trade I want to take. I want to take today. Um, but I'm not in it yet, though it's tapped into my entry. I'm waiting on the 1 hour. Yeah, I'm looking at this current 1 hour candle closing bullish, though it has opened and it's dropping down. So I'm looking at it closing bullish above this place. And then the next 1 hour candle, if that one engulfs, if that one gives like, if this one closes bullish somewhere here, so this is the entry. The entry is the blue line. Price swept the entry, which is a run on a previous high, which is good liquidity grab. But if this 1 hour candle tests and pushes up and closes above, then the next 1 hour candle, I will expect it to test here the entry again. And then if it drops to engulfs, okay, this place, on the retest to this area, I will take the sell entry. So this is like what I'm looking at. So I don't expect it to go too much up, but I mean, and if it takes out this whole place, I will not be looking for sales again for today. So New York session is already playing. It's 1 hour already into New York session. And yeah, so I just didn't bother to trade all the volume today. So let's see, and probably on 4 hour, yeah. So let's see, yeah. So I like to see the 4 hour candle close bullish. The current 4 hour candle close bullish, and it has about 1 hour 30 minutes to close. So that's I have to wait. And today is Friday, so um the trade might be slow. It might take us into next week, but yeah. So I want to wait and see this 4 hour candle. If it closes bullish above this area, close to my entry, the next 4 hour candle, I will expect it to retest a little bit and then engulf. Okay, engulf to the downside, and that will be my entry. Yeah, but for now, I'll just be watching it. Just be watching it and see what will happen. Okay, let's continue with our class. Are you there?
Yes, sir.
Okay, perfect. So where were we? We're looking at market structure, right? So I was saying that the only way that we are going to see um price not give us a sell after this shift here is when it moves up and takes out the high. Okay. But even if it takes the high and it still drops down small, 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 and takes this low out, the bearish move is still valid. That means that market took liquidity here, low here, and targeted external liquidity high and took that liquidity to out, and now has revealed its true like direction. You understand?
Yes, sir.
Uh-huh. So, and it happens, this scenario happens a lot. It will take a low out an external low out or a break of structure to the downside, and also move up to break structure to the upside before it now makes the move to go low. What it means is that market is telling you, I want to go lower. What it's telling you is that I want to go low, but after going low, I want to go high. In other words, market is giving you
Where's my smartphone?
market is giving you indication that I want to go low below this support. And it's at the same time giving you an indication that I want to go high above this resistance. Okay. So all the high points that you see, the external high points, you can refer them as resistance. And the lows, you can refer them as support. So sometimes support can be used as resistance. For example, and resistance used as support. For example, this area that price hit is resistance. Price drops, goes above the resistance, telling us that it wants to go higher anytime it's above the resistance. It comes down to tell us that, okay, I will go lower anytime I'm below this support. Then it goes up above the resistance, drops on the resistance, and uses it as support to go up. Comes back, sweep all the liquidity, the stop losses that are below here, and then quickly move up above the resistance, and boom, it will also go up. You get what I mean? So this is the way that it operates and it moves. It's simple to understand, but it is complex in the way that they have designed it. Okay, so it will take a little bit more of um, studying and consistency to be able to really know how the patterns form and how it works. But at the same time, as you are looking at this chart here right now, this whole place, you can also view this whole place in terms of chart patterns. So um, you can view this area as here and here as double bottom, though it's not like the bottoms are not equivalent or like on the same level. Okay. So here is one bottom, here is another bottom. Sometimes one will be longer than the other. Double bottoms are for reversal. When price is bearish and it forms a double bottom, it can give you reversal. And this will be the neckline. Okay. You can also view this whole place as a head and a shoulder pattern, where this is the left. Let me draw it for you to see. Where this place is the left shoulder, this is the neck, this is the head, and we get a break of the neckline, a pullback to form the right shoulder, and then price breaks the neckline again, the trend line, drops to come below it to retest, and then it's likely going up. Okay, so it's either it will go up to the neckline again here and then fail to go higher and then drop. Okay, drop. Or it will just keep going up. You can even drop to here to form another right shoulder and then go up. You get the point? Yeah, so you can view chart patterns, example, double bottom, double top, even triangle, a lot of patterns that all the patterns you've learned, you can identify them still in the chart in price action. And then if you know how to trade them and you understand their, what they represent in the market, you can take advantage of them or you can use them as extra comfort to normal price action or normal movement of price. I hope you get my point.
Yes, sir.
Perfect. So that's the way, so this is about simple like understanding of market structure. But do you have any question in terms of market structure, like identifying the structure, how it is working, like the price is moving on the chart, the low, the highs, and what it means? And you should understand that on different time frames, you find different structures.
Mhm.
Okay, yeah, on different time frames. So let's say this is the live chart that I was explaining below. So let's say
Go and sleep inside.
let's take this as a left shoulder, this as a neckline, this as a head, and price breaks, price breaks the neckline, drops down to form a right shoulder, and goes up, breaks, goes up and breaks. Okay, so what we need right now is it breaks out and then drops back below. So you see there is a trend line. There is this, the head and shoulder, this trend line that is flowing through here. So this is the point where we can get the setup rolling. So it's either we will sell here, our stop loss will be a little above here. We will sell here, targeting either this low or probably the next area here for a short-term trade. Okay. Or we will be waiting for price to break out above, to break or close a big close above the trend line. So this could be a buy stop trade. And TP1 will just be the high. Okay, this high. That will just be TP1. Okay, so these are the two things that you can see here. And you have to watch the momentum with which the market is moving. Look at the bullish momentum. Look at how big the bullish candles look. That will tell you how um, the volume, the bullish power, the energy from the bullish um, participants that is moving the price. Like there is a lot of buying power. Okay, so if we get a close above here, is a good sign to be looking for buys. A close means the body of this, let's say we are on 1 hour candle now, 1 hour now, the body, this 1 hour candle goes hit the trend line. Maybe the next 1 hour moves up and closes above with a big body. Okay, we need that. Okay, in order to be convinced that the bullish momentum is going to continue. Okay, but if it hit here, we are already seeing some rejections. Let me go to the lower time for 30 minutes. Okay, we can see that it already hit this area. Okay, it's already hit that area, and we have seen rejection. Let me go to 15 minutes. Okay, we have seen one rejection, 1 15-minute candle reject. So let's see what will happen if it will continue moving up, but let's see what will happen around the entry. If it gets here and we see more rejections and an engulfing candle, and we have to be watching the time. Probably we have to allow this 1 hour candle to close, the current 1 hour candle to close. And the next 1 hour candle that opens, we will see what to do, whether it will move up and reject and engulf or not. Then we might be able to make a decision. Or probably we could also use the 4 hour time frame. Okay, so it depends on I mean, the higher the time frame confirmation, the better. Okay, in terms of if you are waiting on confirmation. But sometimes if you are sure of the pattern, okay, this will look like a failed head and a shoulder pattern, which is fine. Okay, which is fine. So let's see if it will go above this diagonal resistance. So the trend line is serving as a diagonal resistance, but we can also draw a horizontal resistance here. We can draw a horizontal resistance. So resistance is where sellers constantly keep pushing price down. So we can see here, and you see the diagonal resistance and the horizontal resistance, they cross. Okay, here. Yeah, so you can see that when price gets here, it hit that place. At the same time, on the trend line, it struggles. Okay, and then it drops. Hit and struggles on the trend line, and then the horizontal resistance, and still drop a little. Go above it and then buys. Go above both and buys. Comes to sit on the horizontal resistance and close to the trend line, and then goes up again. And then comes, breaks below them, retested close to it, and then sells. So if we close above this horizontal resistance and the diagonal resistance, we are likely to just retest it or come below it again and then move above it and then keep going up. Or we can just hit through above it, drop and close below it, and consistently stay below this area. If we consistently stay below this area, then that is going to give us the sell movement. Do you get the point?
Yes, sir.
Good. So, I mean, these are all ways that you can view the market. So I'm combining both little bit of an idea of liquidity, little bit of I'm looking at price action or market structure itself. I'm looking at so what is the other reason why this is likely to sell when it's below? It's not just the support, the resistance or diagonal resistance or below support or something. No. What is the other reason? When price was bullish and was going up, the last significant low that made these highs, I
Mhm.
think is somewhere here. This is the last low. This is the last low here. Low, high, low, high, lower high, higher high, um, lower high, and then failure swing or kind of sweep liquidity and drops. So we can put it here. So when price took out this internal low here, that was a change or a break of structure. And in our initial talk, I told you that for that to be valid, if we get a break of structure like this or a change of character, for that to be valid, when it pulls to the upside, it must fail to give a new high. That is a normal price action. So the moment it fails, let's say it drops somewhere here and then comes back below, it fails, then we are very likely to have the sell. Okay. We are very likely to have a sell. So the only reason why it will sell is if it fails. to give us, if this as is moving up, if it fails to give us a new high, that will clear all this. Do you get it?
Yes, yes, sir.
Fails to give us a new high, that will clear all this. Then it will sell. Okay. So let's say, and this is where you can use your Fibonacci if you've not used it before. It's the tool that we use to measure price action. So for pullbacks, so you can measure on your Fibonacci and monitor anything above 50%. You know, we have the 50% is the middle equilibrium, and above it is called premium. Below the 50% is called discount. If you want to sell, it's appropriate to sell at premium. And if you want to buy, you buy at discount. Okay. I mean, I'm not going to explain more of that right now, but maybe later we can dive more into how to use the Fibonacci and how it works. But it's just an additional tool to help you, okay, put you into the smart money mentality because they like to buy discount and then sell premium. So we have a shift in market structure, okay, and we have a close below resistance, okay, close below resistance. Now, a close below support. So we have a shift indication that we want to sell. Price is pulling up, and right now it's hit 61.8%. And so where do we want to see price? We want to see price get to somewhere above 50%. Now it is above the 50%. It hits 61.8%, and it is currently pulling back. Okay. So this place is a good place to look for sales, but you would want to allow price to give you another bearish formation after it hit the premium. After it hit here, you might want to maybe go to the 5 minute or 15 minute to see another break of structure. Okay, another price action telling you that I want to sell before, without seeing that, even even though we are inside of um without seeing that, even though we are inside of premium, you cannot still sell. Okay, you must see where I've put the circle. You must see a break of structure on the lower time frame. Okay, so the time frame we are using right now is 15 minutes. You might want to move to 5 minutes or 10 minutes. Is there any break of structure yet? No. We have a high, low, higher high, lower high. We have not broken, unless we break this low into somewhere here, and then we probably pull back like this, and we still come down. We still come down to break this low. This is the only way we are going, and then we pull back up and we fail to consistently stay. We fail to go above. Then we can now have a sell. Okay, we have to see something like this. With the current um, pattern, this is not a bearish pattern. This is not a bearish pattern. We don't have any break of structure on the 5 minutes. So it means this trade is not time yet. Perhaps price wants to even go to 78.6% because we have the 61.8% and we have 78.6%. Okay. So it means, and like I told you, you need to wait for maybe the 1 hour candle to close. 1 hour candle just close. If still 1 hour candle close, you don't have a break of structure on 15 minutes or 5 minutes, then wait for 4 hour candle to close. Okay, the 4 hour candle will close in the next 1 hour. So wait for that to happen. And then once that happens, you can now go to the 15 minutes and see if there is any bearish break of structure. Okay, because why are we looking for a bearish break of structure? So one, we need price to stay, even if it goes above this resistance, we need it to come back and stay below it. It must stay below the trend line and the horizontal resistance support. It must stay below. Two, price should be inside the um price should be inside the premium zone. We are now at 61.8%. So it's likely it might move more above to 78, somewhere here. Okay. So that must happen. We must see price somewhere here. We should see price somewhere here. And after getting somewhere,
I hope you are recording the second one. This second one.
yeah, definitely. If
Okay,
we see
thank you.
price come up somewhere here, it must still come down and close below the support. Okay. It must come below. It shouldn't stay above the trend line and the horizontal resistance. It must come below them. It's only that is only when that happens that we can look for break of structure inside this zone and then take a sell. Do you get the point?
Yes, sir.
As long as price is above the trend line and the horizontal line, which is the resistance support zone, as long as price is above these two things, it will keep going up. Okay, it will keep going up. So it must go and fulfill the premium price action, and then come back and stay below the support resistance. It must stay below them. Then we must see a bearish break of structure on 15 minutes or 5 minutes in order to take a sell. And when we take the sell, we can target anything 1:2 or probably the lows here. Okay, we can target the lows here or probably target something more. Okay, so but another scenario is that which also happened on BTC. This scenario happened on BTC. BTC had a double top or triple top formation like this, and then it price pulled down, and then when it went up and got to the premium, it's swept the premium. Then it now went and then went up and then dropped. Then when it came below the horizontal support resistance, it now retested a little and then fell. You understand? You get it? So this
Yes.
is what I was trying to explain to you. So it means liquidity sweep to the down, liquidity sweep to the upside, and now prices. So it's telling you that I want to sell, and after selling, I want to buy. That's the meaning of sweeping liquidity below and sweeping liquidity above, and still now selling. Okay, so that's what I was explaining to you here. It's likely price want to go up, and after doing that, the only way to sell again is when it comes inside the zone. Okay, if it comes inside the zone and stays above the trend line and the It stays above the trend line and the resistance.
Yep, so you both think that I can.
And stays above the trend line and the resistance, it will keep going up. It will keep going up. But if it comes below, it goes below them, it will drop. But after dropping, you should know that it's going to go up again because it gave you the indication. It told you, okay? It told you that I want to go up. I want to go down and I want to go up. That's the meaning of sweeping a low and sweeping a high. You understand? Okay. So let me show you this on BTC, if you don't mind. Um, where is BTC? BTC USD. Okay. So currently, if you can see, wow. Let me go to the 4-hour time frame. So see, look at BTC. Let me clear these lines. Let me leave only this. So this is a place where I've measured that BTC will drop to inside this place. It's already hitting there. It's already hit there. But it's likely to go through it because the formation price is coming with, it's coming straight to down here. I believe strongly that it's coming. I believe strongly it's coming to somewhere here. I believe strongly it's coming somewhere. But this is what I want to show you. So see, so you see, price was bullish going up. Let's say we had this action high, low, break, higher high, lower high, higher high. Then it dropped all the way to give us a lower high. Then we got a relative lower high, relative higher high, lower high. We got this high. Then it dropped impulsively. Let's forget about all this, but it drops to here. Okay, so what is the meaning of this? The last low, this is the last low that has given us this high. Are you paying attention?
Yes, sir.
Good. This is the last low here, this area, that gave us this high. And then we fall to break that low. This is called break of structure. So what we needed,
Volume is lost.
so yeah, so this is it. So if you use the Fibonacci to measure, the expectation should be that we will have price come to anything above 50%. It moved to 50%, it gave us a sell. Okay, 50.61, it sold. Then it pushed up from there again up. Then it gave us above, it gave us like 100%, like a little above 100, swept the high. Okay. Then, but normally, yeah. So, but normally we would wait for price at, you see where I've shaded 78.6%. That's where I like. And there is this resistance here. Okay. So inside the resistance zone, let me just put the resistance and take the shaded area out. And this area is supposed to be like your stop loss. So when price now got there, it hit the place and broke through, taking out this high. Okay. But once it did that, it dropped. So price drops to take this low, which is a standard break of structure, telling you I want to sell. So it's telling you below this area, I want to sell. Below this low, I want to sell. Where the line is, anytime price comes below this low, it will sell. Why? It will sell because it has given you the indication here. Okay. Now, price now goes and then closes above here. So this is also telling you that anytime price comes above this resistance here, I will buy. I'll keep buying. So I will sell, but after selling, I will buy. That is what